Welcome back to this short analysis of happy investors. We will provide an explanation of Taiwan Semiconductor's stock. And note, this is purely for inspiration. No buy advice, nor sell advice. And we only show data tools that you probably do not have access to yourself. So, this way is fun for us to share with you. Short but powerful, make use of it. Note, this is purely quantitative, meaning data-driven, and thus not focused on fundamental, meaning whether the company is qualitatively very good, and what is the intrinsic value from our side. We have not taken that into account anymore, but we will of course show it from our tools. Of course. Taiwan Semiconductor is very well known, is a strong company. You don't need to hesitate about that for long, but there are always risks. Don't forget to visit our website. You can find the link in our YouTube description. On our website, you will find various free downloads, including our stock book and ETF book, but also free calculators. And also check out our paid analyses for just €99 per year. That's not too much. You will probably achieve your return with just one analysis, from the potentially best growth, value, and dividend stocks based on the countless hours of research that we spend, and all the screenings that we also use to identify the best potential picks. For example, the Tiedemann Semiconductor and one of our screenings of unique companies. TSM currently has a very high factor score. And what is interesting about TSM is that, unlike all those other companies that currently have a high factor score, TSM is still doing reasonably well and performs acceptably based on valuation. In other words, not too high a price. In the other analysis, we discussed Nvidia, great company, great growth figures, only the valuation is very high. So the potential risk is of course that lower growth is not taken into account. And if the valuation is very high and the growth disappoints, then the price drop is extreme. TSM, Taiwan Semiconductor, receives a fair value estimate of $215 from Morningstar, and that is above the current price. The economic moat is, of course, strong from this great company. But do keep in mind the geographical risk, namely Taiwan. And the Morningstar rating is 3 stars. Based on the Refinitiv ratings from analysts, the average price target from Wall Street analysts is $217. And we will also look at the price target from 6 rankings shortly. But first, an overview of the historical valuation from Fastcrafts. And it is always very important to take that into account. At first glance, it seems as if, just like in the year 2021, the price has risen too quickly. But looking at a shorter time frame, it might not be so bad, depending on the long-term growth that this company can demonstrate. For example, the normal multiple of this company over the past 5 years was 23. Suppose you take that from the past 10 years as 20. The current price is a bit on the high side with the PE at 27, so it's not cheap. But because the growth is estimated to be relatively high, if those estimates are correct and the company performs as expected, which is never the case, then the total annual average return could be 8%, possibly a bit higher, around 17%, or possibly a bit lower if, for example, things go wrong or there is another cyclical movement in the semiconductor industry. Also look at the long-term growth. And in this case, the analysts, there are only 3 of them, which is not many, so take it with a grain of salt. Expect the EPS growth to be set at 30% per year, which is quite significantly high, despite the fact that TSM has a good position in the market, in the growth market, I should say. Suppose that is the case then. A PE of 30 is justified given the strong growth. It could average 30% per year, up to the end of 2029. That sounds very high. Let's assume a more normal PE ratio, for example, 21, or maybe be a bit more cautious and just stick with 15. Then TSM could possibly outperform in the long term, but everything depends on the long-term EPS growth. And of course, that never goes in a straight line at 30% per year. That doesn't exist. It's not a linear process. It is quite a volatile process, and this model does not account for recessions or perhaps a black swan event. The valuation grade of TSM is relatively speaking. Note that it is relative to the sector, plausible, and reasonably attractive, with a bad luck ratio considering the EPS growth of 0.87. Well, that is significantly lower than the sector median, indeed 50% lower. So that is fairly good in relation to valuation plus growth. But yes, the valuation can always be better and cheaper. Price to cash flow seems to be reasonably acceptable. It is not a dividend stock, of course, and in terms of debt, it is not impressively high. The growth of TSM is relatively strong. So, you can also see it here on the screen. The factor grades are all quite positive for TSM, and that is why it also gets a strong buy. In fact, almost the highest score there is. However, the strong buy is also heavily based on momentum, and with TSM, the momentum is still quite reasonable here. You see, valuation is okay, with a B, growth a minus, which is good, and profitability is also very high. You see here a number of growth estimates. The EPS growth for next year is around 15%. The long-term EPS growth is estimated at 30%. That corresponds with the data we have seen at Fastcrafts. But, note, these are all estimates, so keep that in mind. Still, if it all turns out to be true, and Mr. Market is often right more than not, although not always, as Warren Buffett and Charlie Munger know. However, if Mr. Market is indeed right, then DSM seems to be in an attractive position. However, it ultimately depends on the future price to earnings, what the market is willing to pay for this stock. The return on equity at the moment is very high. You also see profit margins are excellent. Yes, return on capital has been above 10% for many years. That is, of course, very attractive. And other numbers are, of course, extremely good for this company. Zexrank gives a strong buy based on their analysis. Zexrank is more focused on the very short term. You could say that factor analysis, as we just looked at, takes into account the coming 12 months. A Zexrank actually looks at the upcoming quarter, and their given price target is 221. That is slightly above the estimates from Wall Street analysts. Overall, the market seems to say that TSM could possibly be an interesting stock to invest in, but the price-earnings ratio of 27 can always be lower. It can also be higher. Time will tell. Don't forget, TSM is active in the semiconductor industry, which is a cyclical industry. TSM has also dropped by 50% at one point in the past years, but if you zoom out, you will see that in recent years this stock has often dropped by 30%, 40%, or 50%. So always remember, if you are patient and lucky and a crash happens, you can buy great companies for just half the price compared to today. And the overall US market is not cheap, especially after Trump's election. The price rose quickly. So be aware, the risk is simply higher at this moment because the valuations are relatively, historically quite high. Therefore, with maybe a bit of luck in 2025 or 2026, we might buy great stocks for half the price. We will see.